We're going to go ahead and get started. So, as always, starting off with the economic calendar. This week is a little bit of a lackluster week. As you can see, there isn't too much activity going on in regards to red news folders, so it will be a little bit more difficult in understanding which days will be higher probability versus lower probability. And in regards to weekly halving theory, it will also be a little bit difficult to pretty much navigate or pinpoint something in regards to that, because as you all know, weekly halving is heavily reliant on the news spread out throughout the week. That's why it's possible. As we can see, only one day within the week has news. So whenever you see something like this, generally the day that has news and the day before news will print the high or low of the week. So Wednesday or Thursday, we could expect high or low of the week to form. And adding on to that on a week like this, these are not the kind of weeks that you want to try to push or that you want to play very aggressive on, because I believe the good moves of the month have already taken place these past 2 weeks. So this week could serve as more of a stabilization week, and we could see more consolidative price action instead of expansive price action. There's not very much to talk about in regards to price and what happened intraday, because as we can see, Monday expanded higher, completely invalidating this weekly cycle sequential SMT that we saw. So this is going to be more of an SMT study, and what SMTs are supposed to look like, which ones are likely to hold, because as you can see right here, if we get rid, or if we look at the bottom, we can see this is non-sequential, but it still held, and we'll get a little bit into that. But if we focus on the SMT at the high end of the range, which was right here, we can see the S&P trading above this high right here, which was Thursday's high. It traded above it on Friday. And if we look at the NASDAQ, we can see it failed to trade above this high on Friday, creating that weekly cycle sequential SMT. Now, something I want you to keep note of, or to really look at and focus on, is how we traded, or how we initially traded above that high on the S&P. So we initially traded above it, and then boom, drop. So this is something you want to see. Now, as we can see, that SMT didn't fully follow through, and then we ran up one more time, trading way above this high and above this high right here before creating that short-term reversal that led us down to this low on the NASDAQ. So whenever you have a sequential SMT or an SMT of any kind, this is what a low probability SMT looks like. You don't want an SMT to linger around, if that makes sense, or kind of stay above the high for a little bit too long. In a bearish example like this, we traded above the high, we kind of stayed above there and then dropped, and then we traded above there again, still trading above the high, and then trading way above the high. That's not something you like to see. What you do like to see is the same thing that happened with the NASDAQ, trading below this low. As we can see, the NASDAQ traded below this low, traded lower, trading very close to this low, offered a retracement, and then traded lower, purging this low. And then as soon as it purged that low, it didn't overstay its visit, it didn't trade way below the low, it didn't trade too much below it, and it also wasn't too shallow of it either. It was just in that medium range that you can see right here. And then immediately, boom,